Hey folks, this is Sean Hyman from Chart of the Day, and I just want to talk to you today about how to profit from dull sideways ranges. When you see pairs that go into sideways ranges and they're not really trending, you could arguably say this is slightly tilted down, but it's basically, you go from this side of the chart to this side of the chart and it really hasn't made any headway, basically headed, to the upper right, and it hasn't made its way fully to the downtrend to the lower right. So fairly sideways, fairly dull trend. Um, what you can do is you can put on Bollinger Bands, and your charting packages will have Bollinger Bands. You would just keep the traditional settings, which are 22 and 1. That's a 20 period moving average. The bands are two standard deviations away, and what that means is 95% of the price action will be contained within these bands. The bands are the top and the lower line. The middle line is the 20 EMA or SMA. The reason why I say it that way is because some charting packages use the SMA, simple moving average, others use the exponential. Makes very minimal difference. The indicator works the same either way. And this one happens to be the EMA, exponential moving average. So when you are in a sideways range, when the price pierces the band on the top side and comes back in it, you can short. When it pierces the bottom band and comes back in it, you can buy. Conservative traders will take profits at the moving average. So if they short here, they'll take profits here. If they buy here, they'll take profits here. That's the more conservative method and approach. The more aggressive method is to short up here and buy back at the bottom band, to buy here and to sell at the top band, etc. And the reason why some take the more conservative method is because it doesn't always go to the complete other side of the band 100% of the time, or if it does, it can take a very long time to get there. But here was a shorting opportunity, here was a shorting opportunity, here was a shorting opportunity, and here. You could arguably, once these are right at the Bollinger Band, those are aggressive shorts. You can do that as well. And then you had some buying opportunities. I'm just kind of looking from this part of the chart over. Here you had it come outside of the band and back in. Here was a buy, come out and back in. Here was a buy, came out and back in. Here was you could argue that this is a buy, goes to the line and then bounces back. You've got another one here, and you've got another one here. Now, do keep in mind, here's a good example of why you still have to have, some width to your stops, and even occasionally a stop can still get taken out. You get this huge spike down here, and then even though it still comes back and ends up doing what it's supposed to, the spike could take out the stop. Now, you still want the stop in place because if you did get a true trend change, and eventually this will break out into a true up or down trend, then of course you would want a stop there to help protect against losses, because pros always have to protect against losses. Let me show you one other quick example. Euro yen, as you can see, has been in a sideways range. So we can zoom in a little bit. We could, as it comes outside of the band and comes back inside of the band, preferably closing a candle on the inside of the band, you can buy. Again, you can take profits at the moving average, or the aggressive trader can let it go to the other side. We get close to the band here, so it's arguably a buy. This is definitely one where it comes through and comes back into the band. There's a buy. Conservative traders get out here, aggressive ones get out here. This comes down out of the band. The reason why we allow it to come back in the band first is because it's typically a safer move, because the momentum has, at least in the short term, reversed. Does it guarantee that you won't get stopped out? No, it does not. But so it comes out, comes back in, so you buy here. Depending on how wide your stop is, would depending on whether it got hit and taken out here. If it did, once it comes out and back in again, you can repurchase and buy again. Enjoy the move up to here, or up into here. Again, this pretty much touches the band here, so that's where a lot of traders would have been on the aggressive side. Here on the conservative side, Here you had it came outside of the band, didn't hardly come back inside the band, so you'd probably want to wait. Then it has this huge spike downward. I'm sure news event related, and then comes back inside the band. You can buy and then have it head upward. Also, the longer the wicks are outside of the band before they come back in, the better chance of a fairly long run afterwards. So you'll notice on several of these long runs, long wick, and then a nice little run afterwards. It comes out of the band, kind of a long wick, and then a nice run afterwards. A very extremely long wick, and then a pretty decent run afterwards. And what do I mean by pretty decent run? I mean, here we are here at 130. This ran up to over 134, so that's over a 400 pip run there. These are, even larger runs than that. And again, they're going to be over days. This was the better part of a month or so here, running up through here. Somebody would have been in it just a handful of days if they were coming out on the conservative side. If they were aggressive and wanted to get more out of the trade, they would have been in the better part of a month, but they would have gotten a lot more pips out of it as well. Also, keep in mind too, when the price moves up to here and the conservative trader would get out, if you're wanting to squeeze more out of it, you could always pull off part of your lots and sell part of your lots. Or if you're in the U.S. and have to sell all your lots at the same time with your ticket, your order number, then what you could do is you can move your stop up part of the way to protect and ensure that you get some profits while seeing if it'll go on to greater profits. Okay, that is the chart of the day. Hope you enjoyed looking at these currency crosses. Again, I would encourage you to check out our currency cross trader service. It's a phenomenal service. Gives you a lot of guidance, a lot of direction, lets you listen to a voice of experience. We give exact entries, exits, and stop orders in there for you to take a look at. We suggest how many lots to trade per a certain amount levels in your account. All this type of direction we give you on exacts and specifics in that service. So I'd encourage you to call up Sarah or Jesse and check that out. Thanks so much. Bye-bye.